Market sentiment is determined by several factors at the beginning of a new trading week. The main catalysts are the reaction to reports on the US labor market and the disappointment of those who were confident in Donald Trump's outright victory on November 5. This week, there will be plenty of reasons for concerns in the forex market. In addition to the US presidential election, central banks in the UK, Australia, Norway, Sweden, and of course the US will announce their interest rate decisions in the coming days. Investors may also be interested in the political forum in Beijing, where the National People's Congress will convene from November 4 to 8. No doubt the primary focus of the markets is the US presidential election, and ABC News and the Ipsos poll shows Kamala Harris with a 49% lead over Donald Trump's 46% nationwide. Additionally, the online platform Predict shows that Harris has 53% probability compared to Trump's 51%. For comparison, just a week ago, the ratio was 42 cents for Harris and 61 cents for Trump. As the clock is ticking down to the election outcome, traditional battleground regions in the US come to the fore where voters do not have a strong established preference for presidential candidates. So it's crucial for both Harris and Trump to sway these voters to their side. The undecided states include Michigan, Pennsylvania, and Wisconsin, collectively referred to as the Blue Wall. The second ground, North Carolina, Georgia, Arizona, and Nevada, has the poetic nickname, the Sun Belt. According to polls conducted by leading media outlets, Kamala Harris is ahead of her opponent in 5 of those 7 states. In Iowa, Harris is at 47%, while Trump is at 44%. However, there is more uncertain news for Trump supporters. In Iowa, Harris also holds the lead. For those traders whose appetite for buying the dollar has increased as the voting data approaches, the results of this morning's register poll came as a shock. Donald has always enjoyed strong support in Iowa, both during the 2016 and 2020 elections. As of November 2, 2024, his confrontation with Harris stands at 44% for him and 47% for her. The market was so confident in Donald Trump's imminent victory that it pushed the US dollar into a rapid rally throughout October. Now the time has come to pay for that overconfidence. The US dollar index against its 6 major currencies opened below 104 points on Monday. As a result, the retreat in a Trump-related trading hit the dollar index much harder than the labor market report released last Friday. The US NONFARM payrolls for October showed an unexpectedly low increase in employment with only 12,000 new jobs added. As many analysts pointed out, the data for these months will be distorted due to the impact of hurricanes and strikes on the labor market. As a result, investors largely did not react to the weakest figures since 2020. However, Donald Trump himself seemed to believe that the market was, for the most part, ignoring this. And in doing so, he may have made a fateful political mistake. The former US president declared that the October employment report was a disaster, blaming Kamala Harris for destroying the American economy. The retreat of dollar buyers in the euro-dollar pair allowed the euro to rehearse a scenario in which Kamala Harris becomes US president. If this happens, we can expect the currency pair to rise further above 1.1000. Conversely, if that does not occur, the euro could drop toward 1.0700. Such different prospects require traders to be cautious. After all, election outcome will not only determine the future of the United States, but also trends in the global economy and geopolitics for the next 4 years. Interestingly, expert forecasts for the US dollar suggest a long-term increase of 2% if Trump wins and a 1% rise if Harris is elected. Thus, the euro may remain under selling pressure regardless of the outcome. Meanwhile, the major currency pair opened trading this week with a gap, indicating a significant difference compared to the closing price. The nearly empty economic calendar on a Monday also benefits the euro as it allows traders to focus solely on a political forecast. As a result, the euro-dollar pair is trading higher on a Monday within the corridor of 1.0838 to 1.0908. While the euro rises amid a lack of economic news, oil prices have surged based on the recent announcements. Yesterday, OPEC and its allies stated that the cartel intends to postpone the planned increase in production scheduled for December by another month. This means that the reduction of 2.2 million barrels per day will be valid until the end of December. Following the announcement, Brent crude prices jumped by approximately 1.4%. On a Monday morning, oil prices continued to rise within the daily range of $73.70 to $75.10 per barrel. Besides, the rise in oil prices were supported by news from China, the world's largest oil importer. Today, the National People's Congress of China began its sessions, and markets may hear details about measures to stimulate the Chinese economy. Meanwhile, the Russian ruble has not found support from the rising oil prices. On the contrary, on Monday, the dollar-ruble pair climbed to 98.75. Experts do not rule out further weakness of 100 rubles per dollar in the near future. It's not just about the difficulties faced by export-oriented companies due to the sanctions against the Moscow exchange, but the issue lies in the base of a rate set by the Bank of Russia at 21% per annum, which is exerting pressure on the domestic economy. For instance, Russian companies experienced a sharp rise in the payment defaults in the third quarter of this year. Notably, more than a third of debtors encountered this problem. Amid the high interest rates of the Bank of Russia, access to working capital loans has significantly declined. And it has become completely unavailable for 11% of survey respondents. So that's all for today. We monitor developments in financial markets. Subscribe to our channel and follow news with us. Stay up to date with the latest news. See you tomorrow.